You're welcome to my channel. So in this video, we are going to look at the threats to compliance to the fundamental principles. We looked at the fundamental principles in the previous video. They were 5. So even the threats are 5, the types of threats. So threats, these are things that might limit the accountants from acting like the way they are expected to act according to the code of ethics of accountants. So threats are relationships. They can be relationships or circumstances that may compromise or may be perceived to compromise the accountant's compliance with the fundamental principles in the code of ethics. So there are 5 types of threats, and in one of the previous videos I gave you the formula, which is SAFI, SAFI. It is just my own formula, like you can either take it or leave it. So we are going to look at them in details, and the first one is self-interest threats. So for self-interest threats, it arises when the auditor has a financial or any other interest in the client, which may inappropriately influence the accountant's judgment or behavior. An example is when maybe you are auditing MTN and at the same time you have shares in MTN. So you will not do what is required from you, because anything that affects MTN also affects you in one way or the other. For example, if you find out any information that may reduce on the profits of MTN, it means that you will also receive less dividends. So you may refuse to disclose that information because you do not want your dividends to be affected, something like that. So that will stop you from acting like the way you are expected to act according to the code of ethics. So for self-interest threats, it arises when you have financial or any other interest in the client. An example is holding shares in a company that you are auditing. You might not give the correct information, or you might not do what is expected from you. Then the second type is self-review threats. Self-review threat, it arises when an accountant cannot properly evaluate his or her previous work or that of another individual in his or her firm or employer when performing a subsequent service. For example, if like MTN came to you maybe last year and they were seeking like for advice on how they can properly manage their business, or maybe the accounting system to use in their organization, and you recommended the system that they can use, then the following year you be the same firm that is supposed to audit the system that you recommended. You might not give like the required information or what is expected from you, because it is you that recommended that thing. So you cannot talk bad about your own things, something like that. Yeah, it's like maybe giving birth to your kid and then talking bad about your kid with other people, something like that. So you cannot do that to your kid, because it's your kid, it came from you. That's what we call self-review threats. Like you cannot properly evaluate your own work. You recommended what they're doing, so if it's time for you to audit it, you may not like report anything bad about it. Hope you understand that. Self-review threat. Then the third one is advocacy threat, and this one arises when an accountant promotes a client's position or the employer's position, which may compromise his or her objectivity. An example, it's like when MTN and URA are having a dispute, and then you come in to defend MTN. Yeah, so when you're auditing it, you may not, you like, you might end up being biased when you're giving your information. Another example might be like, you market the client's business, you keep advertising for MTN and everywhere. So when it's time for you to audit, you cannot again disclose bad information about what you've been like talking about, or about what you've been defending. So you may be threatened to only report good things, something like that. That is advocacy threat, when you've been promoting the client's position, so it may affect you when it comes to doing what you're supposed to do. Then the fourth one is the familiarity threat. Familiarity, I think you all understand that, like when you're used to someone or something. So this one arises when there is a long or close relationship with the client or the employer, which makes the accountant too sympathetic to their interest or easily accept their work. Yeah, if you've been maybe friends, your high school friends, or maybe the manager of the company that you're auditing is your ex, or it is your wife or your husband, something like that. So you might end up being biased when you're giving your opinion on the financial statements, just because you have a close relationship, or you once had a relationship with those people, or in case it is your ex, you might be forced to report only bad things just because you do not like the person. Yeah, things like that. Then the last one is the intimidation threat. This one arises when an accountant is not objective in his or her work due to either actual or perceived pressure from the client or employer. For example, a client may tell you that if you do not report what I'm expecting, I'll not reappoint you again as an auditor. So you may be forced to only report good things just because you want the job again. So it can either be actual or perceived pressure. Perceived, it's like you assume something to exist when it doesn't actually exist. Something like that. So those are the 5 threats. Self-interest, when you have financial interest or any other interest in the client. Self-review, when you cannot properly evaluate your own work. Then advocacy threat, when you promote the client's position. Familiarity threat, when you've been having a long or close relationship with the client. Then the intimidation threat, it is from either actual or perceived pressure from the client. Thanks for watching. Do not forget to subscribe, like, comment. Let's catch up in my next video.